Chakri Lokapriya, who joins in the studios. Chakri, what are you making of all this euphoria? It's clearly not backed by fundamentals. It's all about SEBI's note or circular that was put out to ban naked derivatives for FPIs, and what we're seeing right now is a short squeeze. But from these levels to 10,000, likely in the next couple of weeks, you think?
Good morning. In a couple of points. One, from a technical perspective, the short squeeze is likely to continue, especially in some of those beaten down sectors like IT, pharma, and once you have this banning by the SEBI, that's going to lead to a fair degree of buying because these are big weights in the MSCI index. And while this is more a short-term thing, there are more trades, I would say, in IT and pharma, and the overall market itself will gradually trend higher.
Chakri, so it's very evident that what we're seeing playing out on the screen has got not much to do with the fundamental story going. If we do get those levels of 10,000 in the next couple of weeks, my question is, what happens then? Does reality set in? Does earnings season disappoint and then we head lower? So what I'm trying to understand is, are these levels going to be sustainable largely because it's a short squeeze? Chances are unlikely, right?
Two or 3 points over there. One is the short squeeze is going to be in a couple of sectors which have big weights in the Nifty, which is IT and pharma. And second is, from an earnings perspective, earnings are likely to disappoint. You're going to have actually negative earnings this quarter led by GST, uncertainty of GST implementation, and a number of sectors are likely to disappoint. So by valuation, it's tough to play by. It's rather that an expectation that come towards the end of this calendar year, things will have settled down from a GST perspective and earnings will start reviving.
Well, going into earnings, and it can't get more topical, IndusInd Bank expected today. They've been a consistent performer for whatever it's worth, and I just want to get a sense from you if you've got coverage on IndusInd Bank.
IndusInd Bank is a good bank. 30% of its loan book comes from commercial vehicles loans, and that segment has been very soft and is likely to revive as we go into the next couple of years. Well-managed bank and not too expensive, and I think it continues to do well from here.
Chakri, we've seen quite a bit of interest in banking in the last day or two, and this is largely on back of, I guess, short covering in PSU banks, which has taken Bank Nifty about levels of 23,500. So technically, it's looking well placed. IndusInd Bank, like you said, good set of earnings expected. So hopefully, there shouldn't be much disappointment on that. Any other banks that you're currently covering that you like?
You know, among the banks, both the corporate banks, we continue to like the space. We recently bought into the SBI QIP. And
SBI Life.
Yes, SBI, the bank itself. Yeah. And of course, there is expectation that SBI Life will be listed. Yeah. And that should provide sufficient momentum to State Bank of India. And the stock in itself is inexpensive and valuation. Balance sheet is stronger. And it's probably its NPLs are peaking. Stress coming down. Okay. I think over time the stock is a very good performer over the next year or so.
So this is one that one can actually consider buying even at current prices.
Indeed.
What about any other PSU banks? Do you have preferences there? I mean, with this whole NPA resolution underway, if we've got any faith in the RBI, then I guess it'd be fair to acquire some of these other PSU names beyond SBI, right?
Yes. You know, that's a good point in terms of faith in RBI. The provision levels and regulations have been changing. And while taking that with a grain of salt, I think banks like Union Bank of India, Canara Bank, the larger ones among the PSU banks are likely to do better in the coming, because both the NPA resolution as well as some amount of what you call mergers or talks of mergers with the more troubled banks.
What is your call on AU Small Finance Bank? Did you track this one? Stellar listing yesterday, 50% listing gains. This morning as well, it's not looking too bad, 4% high, and clearly there's no short squeeze story here. So true. Fundamentally, I guess people are buying into AU Small Finance Bank.
Yeah, it's an issue which was hugely oversubscribed, and you saw that in the opening uptick when the stock listed. But it's trading at about 6-7 times book value. And I don't see much value. It's a good company, good stock, but expensive at current levels to generate further upside.
So it's an avoid at these levels, would you say?
I would. At 6 times book, I'd wait for it to settle down before coming back.
And would it then make a place on your buy list?
Indeed, if it comes down.
About 10-20% from these levels?
Yes, indeed.
Okay, so Smile Finance Bank may not be a good attractive bet yet, but I guess with a 20% correction from these levels, Chakri does recommend this bank for an investment purpose. Well, Chakri, we were talking about earnings season. That's how we started the IndusInd Bank conversation. IT has been seeing a bit of a short covering-led rally over the last day or two. TCS, Infosys, Wipro, HCL Tech, the whole pack is up. Also, I guess traders are in a much more of a hurry to cover their shorts in the IT pack because I guess we aren't expecting too much from the earnings season. When is Thursday, Fridays when you have TCS followed by Infi? What are your expectations?
I think IT is again a tale of two stories. Short covering, a more technical led because of the SEBI regulation. The short squeeze will allow the stocks to go higher. But on a fundamental note, I think one, you will have an EBITDA will be slightly lower than the previous quarter because of a wage hike as well as currency appreciation. As far as the top line growth, the overall industry is probably not going to grow north of 6 to 8%. And so from that perspective, longer term, there is not much money to be made in IT as a sector, but from a short squeeze perspective, yes.
Also, in terms of preferences, do you have any over here in the IT pack?
IT, fortunately, we've stayed out of the entire pack and will probably continue to do so for quite some time.
Well, that's the view coming in on some of these IT players who will be announcing their numbers towards the end of the week, Thursday and Friday, to be precise. Well, today has been all about sugar as well, Chakri. There's been that import duty that's been hiked by the government to 50% to protect local sugar prices. I guess with sporadic monsoon, there's no clarity whether or not our output is going to be good or not, or below expectation. Are you playing this space? Because seasonally, sugar usually at this time of the year sees a lot of trader interest.
Yeah. Usually we've stayed away from sugar as a sector because of the hugely regulated sector and amount of political interference. Having said that, with the new import restrictions, it brings a breather to the domestic players. On the other hand, a good monsoon can help them a little bit. But sugar as a space is generally a trade rather than an investment.
Right. Staying with that agriculture theme, if the monsoon is supposed to be better than expected, and we've seen that in the first couple of weeks of the season kicking off, any other agri themes you're buying into? I believe you like the likes of Kisan Moldings and Jain Irrigation. Take us to both of them and why do you like the fundamentals of these?
Indeed. It's a good monsoon. Second is the government's thrust on greater irrigation. And also the big states like Maharashtra, Andhra, Telangana, Gujarat, all of them are spending a lot of government programs on irrigation. In this space, we like companies like Jain Irrigation, Kisan Moldings, Finalex Pipes. Now, Jain Irrigation is one of the largest in that space. It's a leader. It's had a huge amount of leverage a couple of years ago. The management is doing quite some good work in cutting down its debt levels. And with this current, and also it has acquired some companies in the US, which provides it new technologies in irrigation space. So this will place the company well in expanding into the big states like Maharashtra as well as pan-India. And therefore we like Jain Irrigation. Valuations are cheap.
And even the deal in Israel could be a positive.
Indeed.
For Jain
And Israel, as we know, is very strong technically in irrigation. And that deal is also quite positive for Jain Irrigation. Kisan Moldings is like a smaller cousin of Jain Irrigation, does the same thing, and therefore has room to grow over time. And second, it was a hugely indebted company, high levels of debt, few missteps in the past, now corrected itself and cutting down debt fairly aggressively. And that should allow its margins and profitability to increase. And it's an inexpensive stock, and we like that one as well.
Right. So clearly the story here is more than seasonal in nature. It's all about bottom-up approach where debt is being reduced by these companies, and hence you could see an improvement of financials in the likes of a Jain Irrigation or a Kisan Molding. Those are the two picks coming in from Chakri in the irrigation space. Chakri, you also like some of your paint names. Is this largely to do with, one, of course, seasonal in nature, secondly, lower crude prices, so definitely a huge positive in terms of cost for paint companies?
There's two or three things going. One is, yes, clearly low crude prices have allowed the company to improve its margins. Second, as we are going into the festive season, few months down the road, always a good time for paint companies. And three, because of demonetization and then pre-GST, generally demand has been lower than expected. So we do expect a bunching up of demand towards the calendar end of this year, and which should help paint companies like Kansai Nerolac and Akzo Nobel, the smaller one, along with the Asian paints of the world.
Right, so paint also looks like a good space. Any other real estate ancillary that you're playing apart from paint? So you mentioned Phenolics cables, but anything else that you like in this ancillary pack on back of the government's boost to mid-income housing?
Yes, other than paint companies, the building material companies like Phenolics Industries, who do the piping and ducting for buildings, and also some of the cable companies, including the ceramic tiles, the Kajarias of the world. They'll also benefit from greater demand and also from lower raw material cost, which will allow them to improve their profit margins. I think that as a space will see a pick-up acceleration in its earnings in the coming quarters.
Right, so some other names in the ancillary space of real estate still looks like a good, attractive buy. You've also mentioned you like some of these auto ancillary players. So talk about ancillaries. I guess you'd like to take exposure to the two-wheeler pack, but through the ancillary segment.
Indeed, a couple of things happening here. One is both demonetization, after that GST. You've seen the two-wheelers to be more robust versus that four-wheelers as a segment. And second, because of GST, a number of auto companies are expected to support in times of some kind of inventory support or making good some of the losses because of the GST raises to the ancillary companies. So in that space, we like FIAM Industries, and they make two-wheeler headlamps, tail lamps, and a bunch of ancillary products for the two-wheeler industry. That's one. And second, we're also seeing a shift away from, two-wheeler lamps used to be made of glass. Now they're being made of new types of advanced types of materials, which lowers the cost of a two-wheeler and makes it lighter, faster. And so from this overall secular theme and also a timing perspective, we like FIAM Industries and a few companies in that space.
Right. I just want to talk about another space while we talk about travel, I guess, in some form or the other, is aviation. And it seems like it's all about consolidation. So you've got Jet Airways in the news today on back of course, talks that they would be looking to offload 24% stake either to Qatar or private equity players. Last tweet was about Interglobe Aviation wanting to pick up a piece of Air India. And of course, the Maran story keeps SpiceJet alive too. What are you doing with aviation right now? And of course, lower crude prices is always a positive.
Aviation as an industry has always been a good trade rather than an investment. And so we've stayed away largely. We do a trade here every once in a while. But from that perspective, I think both SpiceJet and Indigo look good as trades at current levels. And but from an investment perspective, we're still staying away.
You're staying away. Another space that you still like is specialty chemicals. Chakri, tell us why, because most of these specialty chemical names, market cap is about 150 odd crores, so they're relatively small in nature. With change in regulation in China, I guess there's going to be a volume and price boost coming in for specialty chemical players in India. Is that why you like the space? The risk-reward ratio is still favorable after the run-up we've seen on some of these names over the last 1 year?
A couple of points there. One is the space has grown and grown very fast, and so you have the smaller companies, and you also have the bigger ones like Make Money Organics or Aarti Industries, who are actually turning out to be leaders in their space. And these are much larger companies in terms of market cap, more mid-cap companies. And these companies are benefiting from twofold. On one hand, you have, yes, China restrictions, which will help them get a greater market share. On the other hand, these companies have gone through huge amount of capacity expansions in the past, and now with the demand both local and global picking up, it's a time for margin expansion. For example, a company like Aarti Industries, more than 50% of its revenue is export revenue. So it's not just dependent on India, and it has a very broad product base. So against that backdrop, fairly diverse companies, diverse revenue streams, and attractive valuations.
Right. What about anything else that you like in the specialty chemical space? So we've had a few other names that have done pretty well in the last 1 year. So Avanti Organics, case in point.
Yeah. Yes, that's one. Deepak Nitrite to an extent. They are doing a fair degree of capacity expansion. The plant is supposed to come on stream in a couple of months towards the end of this year. When that happens, you should hopefully see a big uptick to its earnings. And so these are some of the other companies which we think will do well.
Well, let's talk about some of these other pharmaceutical names. There seems like there's been a turnaround, at least not just in stock prices, but a pickup in approvals and resolution on those observations that were made a couple of years ago. I won't take away the fact that pricing pressure still remains a big worry for pharmaceuticals, but any sort of call over here? Do you have a preference across the stack? Would you invest in these names?
Pharma, again, as a space, we've stayed away for the simple reason of both US FDA pressure plus domestic pricing pressure, pricing restrictions placed by the government. While it's been a good solid couple of years of problems for the sector, against this backdrop, some of them like Aurobindo will start seeing a return to normalcy and therefore some amount of pickup or bottoming out of earnings. But again, as a space, I think the problems are not yet over for the sector.
What about Reliance Industries, Chakri? After 9 years, the stock has finally started seeing pickup in the last couple of months. Do you think this one is going to have to do its bit to take the markets above and stay above levels of 10,000? On RIL, what's your view?
We're very positive on Reliance Industries on multiple counts. Its refining space looks strong. Second, it's Geo, while as a cash burn, will eventually become a market leader. The company's petrochemical divisions are extremely strong, stronger, improving profitability, and still not an expensive stock. So against this backdrop, we think Reliance Industry has the ability to go much higher, probably to 2,000 levels in about a few months' time.
You said Geo would become market leader. Does that mean you'd be avoiding every other telecom space then?
Yeah, telecom as a space we've stayed away for the last few years. It's given the well-known problems of huge levels of debt and lower profitability. And I think against that backdrop, we'll continue to stay away.
Okay. Anything in the consumption pack? I mean, specialty restaurants, you'd imagine, would be a big theme in a country like ours. In fact, if I just look at some of those brands, and it's on top of my mind, which I can't recollect the name of, but there's a particular specialty brand that has about 8,000 units in China, but is struggling with 700 outlets in India. So there's a huge disparity in the way how China looks and how India looks. But it's a space that you'd imagine if consumption is going to pick up, if there's a growing middle class, then specialty restaurants or fast foods should be a theme. We've not seen that with Jubilant or McDonald's. McDonald's, of course, has an impact on Westlife. What are you doing with this upcoming theme? Is it in a void? Is there a future? What's the bets?
These are, we've always approached it from a stock-specific approach because Indian food habits are vastly different from the rest of the world. You've seen that, you mentioned Jubilant, they tried launching Dunkin' Donuts. It wasn't sweet, the donuts were not sweet enough for the Indian palates and never really took off. And so you have certain consumer-specific characteristics. And second is among specialty restaurants, mainland China, the chain specialty restaurants did well for a while, but then everybody else copied onto the theme and it was no longer, didn't have a niche anymore. So these are all, they have a point in time. They're more trades from A to B rather than a secular story.
Right. What is your target on the Nifty? Your end target on the Nifty? I mean, it seems like 10,000 will be taken out soon, but sustaining is going to be what's important, right?
The Nifty is, from a 12-month perspective, is likely to be about maybe to 10-12% higher from current levels, which makes it much higher than the 10,000 number by the end of this year.
So the next 6 months will still be very glorious, to say the least.
Indeed.
Right. Also, tell me about what do you think of real estate? I mean, they've done really well in the last 6 months, but they're still about 80 to 90% at a discount from their life highs. Are you expecting the party to continue? I know there's going to be no real pickup in real estate, but stock prices are saying a very different story. So would that be a space you would buy? Any realty counters that you like right now?
Real estate has done exceedingly well from the beginning of this year because of overblown fears towards the end of last year about demonetization impact. And second is, given all this uncertainty, the real estate companies are focused on pushing out their existing inventory of unsold apartments, commercial space, etc. This does wonders for their balance sheets, which are hugely stretched, and therefore improves their fundamentals. And second, hope of a REIT at some point in the near future is another thing which is helping the sector.
You mentioned restructuring debt was one of your key reasons for buying into companies like Jain Irrigation. JP Infra, JP Group has also been in the news in the last couple of weeks because they are looking to restructure their debt, and I think there's some clarity on that too. Could that pack be a good buy?
Indeed, and it's a good buy depending on, you have to do a lot of work into it because on one hand you have companies which you don't think will be able to pay down. On the other hand is where you think there is a hope of restructuring. So and there a lot of bottom-up work is important in seeing whether the cash flows over the next few years can pay down the debt.
What about some of these financial names like a Religare, Centrum Capital, IIFL? If the new story in India is about financial investments, and clearly we are seeing SIPs, inflows from retail investors only going up month on month, and you know that better than anybody else. Are you buying into this new age theme? Because we don't really have any high street wealth management firms. Yes. A few listed I've already mentioned: Religare, Centrum, IIFL, Motilal. Those are the big names that we talk about. Would these stocks be make good buys, good investment opportunities for the next 1 to 2 years, if not longer?
Over the longer term, yes. Over the short term, they have all done very well. And these divisions companies, the stocks have gone up on anticipation of listings of their various asset management businesses, wealth management businesses, insurance arms, because you have the companies which have all these various divisions put together. And it is that as what has moved the stock prices up. And also the environment for an IPO is good.
Right. What are you doing with the Tata Motors Duo? Today there's been an upgrade coming in on these counters by a bunch of brokerages actually. Anything in the Tata Motor twins?
Tata Motors continues to be an inexpensive stock. Lots of fears about Brexit impact on JLR sales. But the valuations itself should help the company to do well, the stock to do well. Given that it's at the current levels, it's a very inexpensive stock.
Well, that's the call coming in those Tata Motor twins. And also you talked about you like RIL. I forgot to ask you then, what's the take on the whole oil and gas pack then? Anything there that looks good? I mean, HPCL has actually gone ex-bonus today. So, and of course the stock bought consolidation, and it has been for the last 10-15 years now.
Yeah. I think 2 or 3 things are there. One, E&P, the exploration and production bit, like the ONGCs of the world, unlikely to do well because of falling oil prices. Second, refining companies will do well, and that's where Reliance falls into the picture because of its refining division. 3, government wanting ONGC to buy up HPCL might be good for the government, but not necessarily good for minority shareholders. And so from that perspective, we'll stay away from the refiners wherever government wants to do some corporate action.